Hello and welcome to BQ Prime. I'm your host Vikas Srivastava. Today we have with us Mr. Himanshu Mody. He is the Chief Financial Officer of Suzlon Energy. He'll be taking us through the financial results of the company and also the future plans and the way ahead. Welcome to BQ Prime, Mr. Mody.
Thank you for having me.
Yeah, sir. Basically, I went through the results yesterday. Overall, it's a good result. But what could be the reason why the year-on-year revenues are down, at least 1%?
So, if you see at our volumes also, last year, first half, we did about 310 megawatts of deliveries, whereas this year we've done about 267 for the same corresponding period. So deliveries have been slightly lower, and as a result of which the revenues have been flattish, I would say. But having said that, the focus of the company has been quality of orders, which can be executed in a timely and profitable manner. So going forward, of course, we have a confirmed order book of about 1.6 gigawatts that the company is expected to deliver in the next few quarters. So our focus as management would continue to be on timely and profitable delivery of the order.
Okay. And the other thing I wanted to know is that overall the EBITDA has done extremely well. So what has contributed to the EBITDA, and also apart from the forex gain that you all have said?
So if you look at the purely operating EBITDA, of course, it is better than last year or even Q1 this year. That is largely been on improved contribution margin as a result of our raw material input costs being lower. And of course, our net profit is substantially higher compared to previous quarters or corresponding period. That is largely driven by the reduction in debt, or rather completely repaying the debt and making the balance sheet debt-free and a cash surplus balance sheet.
Yeah, you all said that you have become net debt-free company this quarter. So after your QIP, how much you raised in the QIP and how much of that has gone towards debt payment?
So we raised about 2,000 crores in the QIP in August earlier this year, and a large part of that went towards debt repayment, and the surplus cash was largely for general corporate purposes, which is reflected in the working capital of the business.
Okay, and given that the kind of expansion plans that the company has, you all have come out with S122 and S144 turbines, I think. So is there a plan, because there are competitors in the market who have also gone ahead and started manufacturing these 4 megawatt turbines. So would there be some expansion plans where you would need further capital raising in the market?
I don't think we have any imminent capital raising plans. I think the company has now substantial cash on the books, plus the internal accruals year on year would be suffice to meet our expansion or growth needs or our capex needs. I don't think expansion would be the right word. So of course our S120 model has been in operation and is very stable. We've launched the S144 also. Our commercial rollout of the same has started from Q3 this year. We'll get to know more details about it at the end of the Q3 results. So yeah, we will need energies on both these product lines.
Right. You said that this new plant has been commissioned for new turbines. So what kind of order visibility we have and revenue visibility we have because of these 2 new turbines that you have come up with?
So there's no new plant that is being commissioned as a result of the new turbine. I mean, it's just a new model category that we've added, which is being done in our existing facilities itself. And out of our 1.6 gigawatts order book that we have, I would say roughly about 50% is the new model, which is the S144 orders, and the rest is the S120.
Okay, so definitely these must be a premium models. So the revenue contribution also would be higher from there?
I wouldn't say that. I mean, it's not about premium or not. It's a capital good, so it's just a higher capacity turbine. So when we look at cost per kilowatt hour or levelized cost of energy to the customer, it's fairly similar. Yes, there are certain project execution synergies by doing the higher capacity turbines with the customer benefits, but from Suzlon perspective, the unit economics will be fairly similar.
Okay. How much was the forex gain you said that the company made in the last quarter?
So forex gain was negligible, and that's entirely non-cash as a result of certain historical transactions that exist between the parent company and its overseas subsidiaries. So we are also in the process of simplifying our holding structure of the subsidiaries so that we have only entities that are relevant in the balance sheet rather than having a plethora of entities.
So that was close to 4 crore is what you had in forex.
Correct, very negligible.
All right. Okay. And given the current market dynamics and also the government policies which have been in favor of wind sector of late, what kind of opportunities we see for ourselves going ahead?
Well, as you can see, the sectoral tailwinds are quite promising. The policymakers have also initiated several proactive steps, both at the central levels, to promote not only, of course, but even wind as part of the renewable energy. So if we look at renewable energy, both solar and wind, it's no longer the question of either or. It's both are complementary to each other, and both need to coexist. So I think as a result of that, we are seeing a good order pipeline as well that is under negotiation in advanced stages. And as and when those are finalized, as a company, we'll report the same to the street.
Earlier, we had several manufacturing plants abroad also. We had subsidiaries. Is there any plan of, because the demand for wind turbines and renewables is growing in Europe, in US, and other subcontinents also. So is there any plan for Suzlon to cater to those markets and set up new manufacturing plants or offices in new geographies?
So we have a small fleet that we do O&M of in international markets. So there are no imminent plans of setting up a factory or offices in any of the overseas territories. We are very focused on the Indian geography for the next few quarters. Having said that, I mean, we keep our eyes and ears open on what's happening in the overseas markets selectively. And if and as and when there's an opportunity that we see in those markets, we'll be very selective and about entering those markets. But having said that, next few quarters, focus is purely the Indian market, because the demand in the Indian market itself looks quite promising.
Yeah. So as of now, how much international orders contribute to your total revenues?
No, so we don't have any international orders. So the entire 1.6 gigawatts that we have is all for the Indian market.
All from. Okay. And recently, sir, just to ask, the Dilip Sanghvi joint venture, which we had with some pharmaceuticals promoters, so that got discontinued. So what could be the reason, and what has been the impact of that on the company as such, on our orders or projects?
So, clearly the shareholders agreement was terminated between the company and the families that existed now. The reason, very simply, of course, the shareholders agreement has lived out its life. So it was relevant for up to a point, but once the companies come out of the financial distress that it faced in so many years, there was no need to continue with the same. Having said that, the families continue as respected shareholders, large shareholders of the company. And from an operational perspective, there is zero impact of the same. So whether it's project execution or order book, it will have no impact whatsoever.
Any possibility of any mergers or acquisitions that you are looking at? Because there is likely to be consolidation in this space also going ahead.
Nothing actively, of course. As I said, we keep our eyes and ears open on what's happening in the marketplace, and we'll be selective and opportunistic about the same. But there is currently no active dialogue or discussion.
Okay. Okay. Thank you, Mr. Mody. Thanks for talking to BQ Prime. It was a pleasure talking to you.
Same here, Vikas. Thank you so much.